Market conditions, majority bullish, 14-0. S&P futures relatively flat. Today, we're seeing an expansion of trend here. We're above the demand location, above this 61.75 range, 61.50 range for potential retracement support on this breakout pattern that we had over the last couple of weeks here. We are expanding or expanded in the trend and continuing to do so. That is going to start to decrease the probability of continued upside at this magnitude without some kind of a smaller retracement or a pullback or consolidation. So we could see continued expansion as this trend is currently hot. The seasonality is not helping, but we may continue to see that, or we could see kind of just some quiet consolidation bouncing along this upper range as bulls prep and look for more opportunity, more news, more catalyst to be able to push things higher. For this overall uptrend, S&P 500 closing out at 14 and 0 on the weekly time frame there as well. We're seeing the overall breadth pull back just a little bit, back to 72.50. Again, that represents 72% of the S&P 500 stocks that are trading above the 50-day moving average. So you've got a pretty nice majority that are still trending in a pretty decent time frame, that 50-day time frame in an overall uptrend. Obviously, we've been in a pretty long uptrend. The value in this overall perspective in this looking at this indicator is the extremes, though, and we're not at an extreme, so we certainly could get another push higher, maybe a wave that is pushing this back a little bit stronger, maybe with a little retracement that could push this in this upper range. If not, then we're just not getting the overall participation. We've talked about that a little bit. That could be, the location obviously is going to start to come into play. We're at the upper end of the trend, going to start to see some profit taking, all-time highs here as well, and that could give us a retracement, but it'd be nice to see a real extreme number here as well for a little bit more of a topping formation. We're not there yet, and still bullish and looking for that overall uptrend to continue. VIX not giving us real any indication today as well. Majority bearish, 14 at 17 here, so we're less than 20, moving back into that overall downtrend. That's what we want to see for continuation of this bullish trend, is VIX to stay down below that 20 number, and even lower would be ideal. It's holding pretty nicely, holding pretty steadily around that 1650 range. SHY, the short end of the bond yield curve, bonds are retracing back down. That means the yields are starting to climb back up again. So we're seeing yields short term now back to 391. TLT, which is retracing pretty significantly here, majority bearish on both the daily and the weekly time frame, pulling back to that 85 range. So we've got the 10-year, which is now moved back into bullish momentum, majority bullish here as well. That may not bode well for markets. They are going to want to continue to see lower interest rates or trending lower interest rates, and of note right there to be able to keep an eye on that 442 range for the 10-year. Dow Jones Industrial Average still working into this supply location, pulling back, getting some retracement right here. Also has not yet reached all-time highs, but is working that direction. Triple Qs has reached have reached all-time highs here. Majority bullish at 14 and 14 on the daily. Similar pattern to the S&P 500, clearing the overall supply block. Now is a demand location. Anything inside of this green location, pullback all the way to the 236, that 520 range is going to be demand. Is going to be support areas if we get a retracement pulling back. So we've got some room to pull back and retrace and still be significantly bullish right here. And but we may not, we will get it, but it's just a matter of when that's going to happen. Pretty extended at these levels. IWM, which is the Russell 2000, working its way back towards its support location, is supply location, I should say, and has not been performing or participated as well as much as the other indices, but it's been doing pretty well this last week or two. USO, let's take a look here. It's gradually working its way back towards that bullish location. Let me grab this swing low here, and we're not quite back to or inside of this corrective zone 382, not back into momentum quite yet, but it's trying. A lot of volatility here in oil. Gold also seeing some volatility. Let's grab this swing low point right here, and inside of the momentum zone 306, 299 and 300 is that 236 location. You're seeing a little bit of flattening on the upper end of this trend. Still pretty wide for the overall trend, very wide on the weekly time frame. Could retrace all the way back down to 280 and still be in a really bullish uptrend for gold. So if you start to see gold start to retrace a little bit, a deeper retracement back to that 280 range would be a interesting location for additions into gold if you're looking for that play. SLV also getting and continuing this overall momentum. Dollar, we touched on that briefly yesterday, still majority bearish, and the overall bond yield curve sitting at 0.5 now, majority bullish. Still, this weekly time frame is a little bit more effective looking at that, but still moving in the right direction. And we've seen some bond movement activity here recently. A couple stock ideas to consider. We're getting some nice moves in gold. This is DC, which is Dakota Gold. Also seeing a setup here for MATH. We actually do have a trade set up for that one, ready to roll for today. If you'd like more information, there are links in the description as far as the screen criteria, some educational training course, access to the substack, and give you just all of the resources available to be able to implement and utilize the strategy. That'll do it for today's update. Everyone have a fantastic day today.